Forex chart formation patterns lesson 8. Learn Forex ascending and descending triangle formations. When there is a continued bullish pattern, it's known as an ascending triangle. It's a consolidation pattern generally formed during uptrend when the price is holding the resistance level but still making higher lows. Let's look at the charts. As you can see, in an uptrend, the high sets a new resistance. This level holds and the price pulls back, creating a higher low. This process repeats itself several times until the price has no more room to oscillate and it finally breaks to the upside. The price target for this formation should be the height of the triangle measured up from the resistance level. Descending triangle is an opposite pattern. It generally forms during a downtrend when there is a set support level, but the price is still making lower highs. In the chart, you'll see that the prices are unable to break the support level, but as the downside pressure persists, it finally breaks to the downside. The price target is the height of the triangle measured down from the support level.